Morning. Goviex Uranium, African developer, definitely focused on becoming a producer in these markets, and at $106 uranium, definitely the place to be targeting rather than the exploration side. Disclaimers and cautionary statements in case I say something forward-looking. They're on our website, and this presentation can be found there as well. We are, in summary, a Africa-focused uranium development company. Our core assets are two mine-permitted projects. So they're ready to go. In the case of the Madaouela project, we already have the feasibility study. We were working on the debt. I'll come back to Niger at the moment because we have some political issues there, having had a coup. We have the Matanga project, also mine permitted. That one's on target for finishing its feasibility study this year and then go straight into mine permitting. And we have an exploration play that is the Falea project in Mali. This is all about the uranium market, and I'll come on to that in a minute, but effectively at the end of the day, the uranium market is undersupplied. It's got a declining number of producing assets. It needs new projects, and the demand growth continues to get stronger, driven by increasing amount of government involvement in it as it becomes clear it's needed for the green economy. But having your projects permitted is an absolute key part of this. The ability to take them straight into the production phase is what's going to be our benefit, and Africa certainly makes that a lot easier. Just before we start, from a valuation pitch point of view, just for the whole sector, uranium market has run, and it was actually the best performing commodity last year of all commodities that trade. So great year for uranium, but we're now up at a position where we are at a 15-year high. I believe we'll still see that going even higher. And why? We've got an increasing commitment around the world. Uranium is now becoming a major part of pretty well every government stage. There are a few stalwarts who are remaining anti-nuclear, like Germany and Spain. But at the end of the day, most districts have realized that if you want base load power, you need to have nuclear. It's very safe. It's one of the lowest producers of carbon emissions, uses a very small amount of minerals to build it, and has no critical minerals other than uranium required for it. We're starting to see restarts. More importantly, we're starting to see extension of reactors around the world that are operating. But China still remains the biggest driver of this. And putting that in context, last year China consumed about 11,000 tons of uranium. By 2040, China will be consuming 44,000 tons of uranium. So within 17 years, quadruple its requirements going forward. You look at SMR development coming through, still nascent, but we are looking at probably the first SMRs coming into production from 2030 onwards. There's a lot of investment in a number of what we need in SMRs, though, is the standardizations. There are too many choices. We need a few of those choices to come through and start to go through. But our biggest problem is underinvestment in the industry. We are looking at a massive underinvestment from exploration if you compare it to where we were back in 2008, 2009. The chart in the bottom is interesting insofar as in 2022, the green block is what came from existing mines, was about 75%. The rest came from inventory. By the time you get to 2030, while we've got a few new mines forecast to come in, we're looking at a reduction down to 64% of what those new. By the time you get to 2040, existing mines that are running today will only account for 20% of everything that's produced. So it's an industry that's relying on projects getting built to fill the gap. And we all know projects are always difficult to get on time and on budget. So a lot of risk in this industry. We need a lot more production. Otherwise, we're looking at pricing risk getting even higher. Madaouela, it's in Niger. It's right next to the mining operations that Orano ran since 1971. Really good infrastructure, power, water, people, all of those good things. We've been engaged with the lenders on this project. We have the government in at 20%. Morning of the coup. So I just started writing the press release and had to stop writing the press release. Where we currently stand at the moment is a geopolitical standstill. We're waiting to see which way the government of Niger moves geopolitically. They've kicked the French out, but the US government is trying very hard to maintain that position, enforce a transition to a democratic government, and they're doing that using Uncle Sam's dollars to ensure that that's the way, by investment, etc. The Niger government at the same time is looking else to see who else is pretty at the dance. Some of the parties that the US government would not like to see get into the dance. So we're in this position at the moment. The regional governments have basically locked the landlocked country down with a series of blockades. So the country is in a nascent position of having no money, no imports, no exports. A decision has got to be made to free that up. Democratic rule change is all that's going to happen. So in the meantime, we deal with the government, we move forward on our projects, but it is delaying us on the financing. But we are working with the lenders, so hopefully when it gets cleared up, we can accelerate into that process. Zambia, before most people didn't appreciate we had two projects. This one is mine permitted. We're currently moving it, as I say, to feasibility study. Again, great location. Right next to the Kariba Dam. I can get hydropower straight through into the project. Main roads right next to us going forward. This one, we own 100% of it. It is been to a pre-feasibility study with the previous owners. We did have a PEA out, which we've had to take down because we put a new MRE out, and you can't have a PEA out with the new MRE. The MRE effectively saw an 18% increase in our tonnage. We were only infill drilling, but we moved from 25% to 75% on M&I, which is what we need. We've just done a whole load more infill drilling on that I and moved it up even higher. The benefits of this project are cheap power, really soft rock. I don't need to mill, crush, very low acid consumption, a tenth of what we consume up in Niger, in a country that produces sulfuric acid. Well permitted within the country, no major issues. It's got a much higher IRR than my other one. At the current price, at $75, this one has an MPV of about $300 million and a 44% IRR. So you can imagine what it would be up at $100. So currently working on the ESI feasibility study. Once we get that, we go straight into financing on it. Strong ESG position, very important in Africa, but more importantly, if you want lending, you have to have a very strong. Talking to the DFC recently, that is their first thing. You have to pass their ESG credentials before they will even look at you from a financing point of view. Same applies to the European off-takers. We have to go through those steps. So we've been putting out our sustainability reports as well. We recently cashed up as well at the end of last year, so we are funded for this year. Insiders are sitting at about 11.4%. Valuation, we continue to trade at a big discount. Now, I appreciate we're sitting there with a Niger coup discount sitting on us at the moment, but if you look at it from a point of view, we're trading at about 0.5 times our valuation for Matanga at $70. So you're getting Niger for free on this. This is a full option for a project which I ultimately see Niger coming through. But you're also getting the Matanga project cheap as well. So a lot of value to be had on this company going forward. And it is ready to get into construction, subject to the financing process, which I don't see being a problem. We had a lot of good support from SADC, the Southern African countries, during the Madawaila financing. They just couldn't come into Niger ultimately, but they can definitely do Zambia. So strong market, looking very robust. Expect it to continue to get stronger. We haven't seen the long-term price move, but month end, watch for the big jump from that. It was at 68 last month. Expect that one to move up. We are Africa focused for a reason. You can get projects done. We've got a management that have done this before, and really it's all about getting into production now for this cycle, benefiting from where cash flows are coming from, not for the exploration. And we have a lot of exploration upside anyway, but we'll be able to do that when we've got cash flow. So thank you very much.